Seconds away from initial jobless claims data in the final revision to first quarter GDP. Futures indicated higher across the board. Rick Santelli is at the CME in Chicago. Rick.
Yes, Melissa Lee, of course, we're expecting our last time around the block, third time with respect to GDP and initial continuing claims. We could never stress enough how much importance that we put on those numbers. On the GDP side, we actually see a jump from 1.3 up to 2%. It's very unusual to see these types of moves when you're this long in the tooth. And do keep in mind, it really doesn't change any of the metrics for GDP because the 2% or 1.3 is still going to be the lightest that we've had since the last quarter of last year at 2.6. Personal consumption is coming in now at 4.2%. Also a very nice jump from 3.8. On the pricing index, 4.1%. It was 4.2 in the rearview mirror. It was expected to be 4.2. 4.1 is not the lowest, though. 3.9 was the lowest after the 9% read, which was the highest in 81. That was in Q2 of 22. So progress being made, but obviously slow progress. If you look at the core personal consumption expenditure, quarter over quarter, that's 4.9%. That's 1/10 less than the 5% we were expecting. And how does that pan up to history? Well, second quarter of 21, not 22, was a high watermark. That was at 6%, the highest since 83. The lowest it's been was the fourth quarter of last year at 4.4, and now 4.9%. So we see that this is also very sticky. As a matter of fact, we've had several numbers, of course, that were at 4.7, mid-22. So this is definitely a bit on the high side. In terms of jobless claims, 239,000. We're expecting 264,000. That is a huge, huge move. And 234,000 bring us to the lowest level going to the last week in May. And with respect to continuing claims, 1,742,000. That indeed is less than the numbers that we were expecting. And once again, we continue to stay below 1.8 million on the continuing claims side. Interest rates have moved up, Melissa Lee, and I'm sure they're moving up for a combination of a lot of reasons. Claims are on the light side. That keeps the Fed potentially hot. And even though our numbers, unlike Germany and some German states' inflation data that came out today, which was higher in most regions, higher than expected and higher than the last look, these were tame, but the Fed's going to have a tough job, and the Biden administration is going to have a tough job explaining away what still remains sticky but improving inflation.